Consumer Price Index released just 30 minutes ago, better than expected and boosting optimism on Wall Street. Stock futures are skyrocketing before the opening bell. This follows new optimism from Treasury Secretary Janet Yellen, who says she expects a major cool down in inflation by this time next year. Today's report may be a sign to the Federal Reserve that it can finally let up on its aggressive interest rate hikes. Newsnation business contributor Lydia Moynihan joining us right now. Lydia, is this a sign that things are kind of getting back to normal? I don't even know if normal is the right word for us right now.
It's a fair point. What is normal these days? And it's a good point because 7.7% inflation is still extremely high by historical standards, and it's still painful to go to the grocery store and the gas pump and you see things are still increasing in price. The good news today, and the reason why we're seeing Dow futures skyrocket well over 700 points on this news, is because it's clearly a step in the right direction. I mean, even though this is taking longer than we'd like for inflation to come back to more normal levels, it finally is seemingly going consistently downward. So we had expected to see year over year inflation come in at about 7.3%. Instead, it came in less than that at 7.1%. And this is a dramatic decrease from even last month, which was 7.7%, and the month before, which is 8.2%. So Secretary Yellen's predictions that inflation could come down rapidly seem to be happening, knock on wood. Important to note as well that that core inflation number, that is all inflation except for food and energy prices, that number is also coming down more than we had expected to see. And that's what the Federal Reserve looks at when they consider raising rates. But Adrian, of course, what is normal is a great question. 7%, again, it still feels really painful. But fortunately, it seems like it's coming down. And in a year, hopefully, we'll be talking about how crazy it was that inflation was 7% and things will be back to normal.
All right. At least that is the hope. Thank you very much, Lydia. To add more to this conversation about the latest inflation report, we're joined right now by the founder of Swoosh, Melissa Armo. Melissa, what do numbers today that we're seeing here tell us about where our economy is headed?
Well, for one thing, it is good news that we didn't increase as much, but it is bad news that we're still increasing. So the thing is, the Fed is going to raise rates tomorrow. The question is, will today's number change the Fed's course? In my opinion, no. So the Fed is probably going to say what we're doing is working. Raising rates at the pace that we're doing it is working. Therefore, we're going to continue to raise rates as much as we've been in the last few months. So I think that they're going to raise rates a half or 75 basis points tomorrow, and the market will most likely react negative to that. So this number today, in my opinion, is going to keep the Fed on course because we're still increasing in prices. We still have high levels of inflation, and we're nowhere near the 2% mark that the Fed wants to be at. If anything, I think the Fed is going to overcorrect this time. In other words, they kept rates too low for too long. Now they're going to go the opposite direction. They're going to keep raising them until it gets to the point where they're going to be forced then to drop down. But I don't think things are going to change much in the next 2 years. Look for something to change maybe after the next presidential election, and that's a long way away.
Yeah, it feels a long way away, but it seems like time is going by so fast right now. How do you think this will impact the Fed's long-term strategy on rate hikes?
Well, again, right now, mortgage rates are close to 8%. A year ago, they were 4%, which is tough for consumers. It's not just the cost of goods and services that people are buying. It's if you want to borrow right now, it costs more. But the Fed isn't really concerned about that. The Fed's job is keeping the unemployment rate down. And the Fed's job is also to watch what's happening with inflation. So because we increased and we didn't decrease, even though we didn't increase as much, again, they're going to keep raising rates, which means what? Mortgage rates could be I'm just fast forwarding 4 to 6 months from now, could be 9% for a 30-year fix. Did you ever think you would see something like that in your lifetime? I'm talking about for a prime A borrower. I'm not talking about subprime. This is like 700 FICO scores. So I think the Fed is going to continue to raise rates. I don't think they're going to change anything after the day. They're going to say what we're doing is working. We're going to keep doing it until we're at the 2%.
So is it a sign of the Fed executing that so-called soft landing?
Well, I don't think it's already soft because the market's falling so much. So they can. I think it's too late for a soft landing if that's what you're saying. I think we're already past that point. Now, while the market's been trying to rally, we're rallying today. We've been trying to make a comeback in the last month. I think the idea of a Christmas rally is pretty much out of the woods now. We're rallying today. If you want to count this as a Christmas rally, fine. It could last 24 hours because I think there's a high possibility we could fall between tomorrow and Christmas and then maybe eke out some gains into the end of this year. But long story short, I think the market had a really rough ride this year for people that were in retirement or already close to retirement. If you're young, stay the course. The market's going to come back. But I'm just telling you that it could be 2 to 3 years out, because of the fact that things in this economy are not back to where they were. While it's great to say that the number didn't go up as much as we thought, things still cost a lot of money right now, and rates are still high. That's not good for anyone.
Yeah, and really the president is actually going to come out and speak about these new inflation numbers. Thank you very much, Melissa Armo from Stock Swoosh.
Thank you.
Now to our border report. El Paso